Welcome back. More breaking news on the economy. Weekly jobless claims are up better than expected. 203,000 versus an estimate of 214. This added the big August jobs report due out tomorrow. We are expecting 195,000 jobs to have been added to the economy in the month of August. 191 is the estimate, with the unemployment rate ticking down to 3.8%. Joining us right now, the founder of Potomac Wealth Advisors, Mark Avallone. Mark, good to see you this morning. Thanks so much for joining us.
Good to be here.
What are your expectations for the number tomorrow?
We think it's going to be around the 200,000 range, continuing a strong trend that we've been seeing. We also think wages are going to continue to be strong. They've been up around 2.7% for 3 months in a row, and we expect a positive trend to continue. The underlying strength of the U.S. economy is pushing wages higher. Demand for labor is strong. It's hard for employers to get employees at low prices. They're having to pay people more. Overall, a very robust job market.
How worried are you about the trade issues? China says this morning that it's ready to roll out retaliatory tariffs should the White House level any tariffs on an additional $200 billion worth of Chinese goods. Are you concerned that these trade tensions unwind what has been a very good performance in terms of the economy and growth?
Well, it's clear it's game on with this trade skirmish, and we just hope it doesn't go into a full-fledged trade war. The Chinese-American spat right now, look, we have fair and honest grounds to want to get them to improve their unfair practices. What concerns me is that we're bringing in Canada with harsh rhetoric. We're challenging the EU at the same time. What we should do, since China's an unfair trading partner for the entire world, is we should be getting a united front and taking on China one-on-one, and then trying to be a little more diplomatic working out these other issues. We don't want to take on the whole world at one time, because that could depress economic growth globally and here at home.
Mark, Mitch Rochelle, well, I'd like to go back to jobs for a second in the context of the market, and specifically, let's say tomorrow's number is a miss and it's disappointing. Does that become one of those situations which we were talking about before, where bad news becomes good news? Is that a possibility? Because I'm trying to figure out, if the market didn't really react to the number, the ADP number a little while ago, I'm curious what the market's expecting in reality, and if there is a miss, if that ends up being good news for the market.
Well, I think if it could be a miss, it could be a 1 month subject to revision. So I think that's one reason the market doesn't take too much into just 1 month. But you make a good point. The Fed is really the big threat to this stock market. If they rapidly raise rates, that could put a damper on the U.S. stock market. And a slowing jobs number could be a pause, create a pause for them to not be as aggressive. So it is kind of a catch-22, a silver lining. But again, 1 month doesn't make a trend, and that's what I think investors have to look at when they're looking at these reports.
I think we're also looking at the wage number tomorrow coming out. And I guess the question is, what are our expectations there? What would be considered a real blowout wage number in your view? Because I think that's almost more important politically as we come into the midterms.
I totally agree. Look, Trump's been trying to put more money in the pockets of all Americans, especially the workers that have struggled during the past decade, and he's done that. The wage growth has been real. So let's say we get a blowout number, even if it approaches 3% year over year, which would be a jump from the 2.7 that I mentioned. Look, in reality, the real wage growth is slightly less than that because of the inflation outlook. So if we consider a net real wage increase of only in the 1% range as pressure for the Fed, I don't see that happening. The Fed is not charged with squashing an economic recovery. Remember, one of the mandates of the Fed is to improve employment as well as dampen inflation. So I think they would actually be counterproductive and a little more aggressive than necessary, even if we got a good wage number. I think they should look at a good wage number as a sign of a strong economy and not something to put the brakes on that robust recovery.
Are you expecting things to slow down considerably in the coming years? Because there is a narrative going on right now, Mark, that while we are going to see pretty good growth this year, by the time we get to the end of 19 going into 2020, things slow down quite a bit. I don't really understand why that is such a persistent viewpoint. What's your view on it?
It's possible. I'm with you, Maria, in that I don't think we're going to have an economic slowdown of significance in 2019. But I am concerned about year-over-year earnings growth that affects the stock market. The stock market had a huge catalyst this year for earnings. It can't be denied that the tax cut had a huge boost to corporate earnings. So when I look out in late 2019, early 2020, I want to know what that next catalyst is. Is it infrastructure spending? Is it a calming down of the trade war? But we'll need something to keep the level of earnings growth to keep the stock market support level. But I agree with you. I don't see the economy crashing in 2019. It's more of a stock market concern for me.
All right, we will leave it there. Mark, great to get your insights. Thanks so much.
Good to be here.
Mark Avallone.